Hepatitis C certainly has been in the news a ton during 2015, and I think it's poised to be a big issue in 2016 as well. There are quite a handful of different companies that are working on improving treatment for hepatitis C. And in most recent news, AbbVie, which makes a drug called vying, and another one called Technivy, received news from the FDA that there was a safety alert going out that the FDA had received reports of liver failure and complications in patients taking these drugs that had already had scarring of the liver. So AbbVie said in reaction to this that a causal relationship between the treatments and the adverse effects hadn't actually been established, but the drugs couldn't be ruled out as a cause. Another result was that the label for the drugs is being updated to warn against use in patients with more advanced liver scarring. This is 3 to 5% of hepatitis C patients, just for context. So I think people saw that news and they said, oh man, AbbVie is not going to be a big player in hepatitis C anymore. So then if they're potentially going to lose market share because of this, who do you think stands to be the big winner here? I mean, this is kind of like for me at least, a no-brainer of a question if you've listened to our show before. But Todd?
Gilead Sciences.
Woo!
Not very surprising for long-time listeners, that's for sure. The news coming out of it, AbbVie tried to downplay this on their earnings conference call. And I urge people to always dig into the transcripts of the conference calls, especially with top-selling multi-billion-dollar drugs, to make sure that there's nothing that they need to be aware of that could shift the market share, the way market share looks. And certainly as we go into 2016, a lot could theoretically happen that's going to shift shares around in hepatitis C. AbbVie is just one part of that, but it's an important part of it because, as we came into 2015, the big question on everybody's minds is how much market share can vying steal away from Gilead Sciences' top-selling drugs, Sovaldi, which launched in December of 13, and Harvoni, which launched in October of 14. Those drugs have been massively successful. They're high-priced drugs, but they work very, very well. And as a result, they've been used to treat hundreds of thousands of patients, and they've generated out billions of dollars in revenue for Gilead Sciences. Vying over the first 9 months of this year, so it won approval and launched in January, okay, have not reached the run rate that AbbVie had hoped and had guided for coming out of 2014. AbbVie had hoped to see that drug putting up a run rate of about $3 billion per year. We're not quite there. In third quarter, it was about $469 million. So you look at that and you say, okay, well, why is that happening? It could be that there was some early insight into this problem with livers. As doctors were discussing with one another, this revelation, this addition to the label, it's not a deal breaker for vying because it's still very successful in patients that don't suffer from liver disease already, but it certainly could mean fewer people are treated with it, especially since Sovaldi and Harvoni work so well. That to some extent, the sales impact on AbbVie in 2016 may be offset by a recent approval in Japan, which is a major market for hepatitis C treatment. So it's not sure. I'm not willing to go out and say yet that the year-over-year sales will decline for vying in 2016 because of this, because Japan should offset some of that downside risk. But it's definitely something to keep an eye on. And I think that most people should be reevaluating their models on what they think vying could do in the next 12 months.
Right. And when you look at Gilead, you compare the numbers of Harvoni and Sovaldi, and so they combined for $4.8 billion in sales during the third quarter. And Todd quoted that vying generated revenue of only $469 million in the third quarter. So, $500 million is not nothing, but it really pales in comparison to Gilead's numbers. I mean, Gilead is claiming a 90% market share of hepatitis C patients. So clearly they're currently the dominating player, but is there anybody else, Todd, other than just AbbVie, that's competing in this space and could stand to take down Gilead's dominance here?
There are a couple. Bristol-Myers has a couple drugs that are currently on the market. However, most of those sales, and again, we shouldn't downplay billion-dollar run rates, but Bristol-Myers drugs in third quarter for hepatitis C brought in about 400 million. That was down from 460 million the year before, because most of Bristol-Myers sales, or a lot of them in that space, are coming out of Japan. And in the past year, Gilead Sciences has won approval in Japan. Now AbbVie's winning approval in Japan. So I think Bristol-Myers is going to end up becoming more of a niche drug in the space, selling more drugs in the niche category. I think a much bigger threat, though, could come from Merck next year. So people should be watching Merck very closely in January of next year, because that's when the FDA is set to make a decision on approving its hepatitis C drugs. And in trials, those drugs, in my opinion, match up best to what Gilead's Harvoni delivered in its own trials. And obviously, we know that Harvoni has been a massive success. So it'll be very interesting to see how that plays out.
Yeah, especially because the drugs are kind of similar in efficacy, and they're both 1 pill per day. To me, the only advantage or distinguishing factor that I could see here between the offerings from Gilead and from Merck is Harvoni can be dosed over just 8 weeks in more than 40% of genotype 1 patients, and that's the biggest percentage of patients with hepatitis C. Merck's drug is always going to be 12 weeks. So if you reduce duration, that's going to improve adherence, which is going to make your real-life efficacy better. So I could see that being an advantage going to Gilead. Maybe if it ends up going the other way, it could be a pricing issue.
Yeah, but Merck on its conference call was pretty firm in saying that no, they're not going to fight on price for market share. So that'll be interesting to see how that plays out too. Vicarapac could be the one that stumbles.
Yeah. And one other thing that I'll point out is Merck doesn't have any other hepatitis C drugs all the way back until phase 1. So, to me, it doesn't look like they have this huge lineup of drug after innovative drug to win away market share. Whereas you look at Gilead Sciences, and they're already developing its own next generation hepatitis C therapy. And this really, to me, looks like somebody who is continuing to innovate and continuing to try to get even better and better drugs. The next hepatitis C therapy that they just submitted to the FDA for approval on October 28th is a pan-genotype drug, which could theoretically eliminate the need for genotype testing to distinguish, do you have genotype 1 or which particular variety of the disease. So I could see this being particularly helpful in emerging markets if, they don't quite have the same healthcare infrastructure that we have here. To eliminate the need for genotype testing could make this drug more accessible, and the data looks pretty good. In phase 3, it posted a 98% durable response after 12 weeks, and this was a trial across genotypes 1 through 6.
Yeah, and again, this may allow them to sidestep any threat from Merck as well. There's no question in my mind that Gilead Sciences is going to be the dominant player again in 2016 in syndication. Merck may pass AbbVie, and then in 2017, if you really want to look forward, maybe then it gets a little bit more interesting again, because that's when AbbVie's next generation cocktail could hit the market, and that's also when other therapy from Johnson & Johnson may start to make its way towards the FDA as well. And we shouldn't discount Johnson & Johnson. They're just a little further back in their research. They've got some ongoing phase 2 stuff underway, which looks really intriguing and could again help them in creating a shorter duration therapy for HCV. So this is going to be a very interesting space to watch over the course of the next 2 years still.
Yeah, and as long-term investors, that's what we want to be looking at, is not just who's the current market share winner, but looking ahead at the pipelines and figuring out who will continue to win this space. I think one last big piece of the puzzle that is worth touching on is, so you have a hepatitis C treatment. That means you're cured. So are these drugs eliminating their own market? Do you think that this isn't going to be a huge space for drug makers in a couple of years because we've already treated everyone?
Yeah, even if you look at it and say, okay, if Gilead's going to treat 300,000, 350,000 people a year, maybe the other ones we get up to 400, even if we get up to 500,000 people per year, the U.S. market should be able to handle that kind of pace until at least 2020, maybe 2021. Japan should be able to, that market's still probably addressable into, 2023, 2024. I'd say Europe goes even further than that because they've got 9 million people who are suffering from this disease. And then, of course, there's the emerging market population, which, some people estimate as high as 170 million people. So, yes, eventually, I mean, the goal would be to have no one having hepatitis C because of these drugs. Does that mean that this market disappears in the next 2 years? No. 5 years, it starts in some places to get a little bit murky. But I would say that you're still generating a lot of money. This is a multi-billion-dollar blockbuster indication for at least 10 years.
Yeah, I would agree with you there. And there's so many people that are estimated to have this disease. And I think once the drugs are more and more prevalent, especially in developing areas, you're going to get a woodwork effect where even more people go and get tested and figure out that they have the disease. And the hope there, of course, is just that we have the best of the best drugs to treat them with.